I see.
Good afternoon, everybody. This is Bonnie Watson. Happy Wednesday and welcome to our Western Slope business update call that we hold bi-weekly. We're super excited to have you here. We have a fantastic group of people presenting today on commercial and liability insurance. So it should be a very resourceful call today as you guys join in. With that being said, and you go to the next slide, Erin, excuse me. We just want to point out some of the individuals that are involved every single week on this call. This is really a collaboration of so many team members and so many people behind the scenes that bring this to you every day. It started very small and it has grown into a really incredible resource. And those include the Telluride Foundation, Startup Colorado, Colorado SBDC, both our Northwest and East Colorado groups. And then we have GROW, SECO, Galala Commons, and then Colorado Office of Economic Development, International Trade, or OEDIT for short. So with that being said, before we get into the agenda today, I did want to just mention that we're very aware of the issues going on, and we try to stay on the pulse of what small businesses need. And so with that being said, we're going to start an audience poll every week. And really what we're trying to do is we're trying to get the temperature of what you need as a resource. And as you continue to respond and recover and adapt to the pandemic, we want to ensure that we're bringing you the information and resources that you absolutely need. So at the very end of today's call, we are going to do a poll, and we really encourage you to stay on the full time because your input is incredibly needed for us to continue these calls as we go forward. So with that being said, today's agenda, we're going to be talking about the ins and outs of business insurance in response to COVID and really focusing on and highlighting business interruption insurance and commercial guarantee liability issues that come with that. Today, we are extremely excited to have OEDIT's legal committee on. So we have Brad Levine and then Nelson Waneka and Sarah Wallace as well to talk about commercial liability insurance. And then at the end of the call, we always try to bring in a resource highlight. So we have Joe Reinhardt, who is the co-founder of Main Street Phoenix Project. And the mission of that project is to really help assist employees in securing joint ownership as employee-owned companies to reopen small businesses that may otherwise remain closed after the COVID crisis. So it's a really great lineup. We're super excited to hear from everyone today. And as always, this call is being recorded. We will have a follow-up email that comes after every call that we've done with all of the resources and connections that you need that we provide here today. And as always, please feel free if you have any questions. We'll have a little bit of time to take a couple questions today, but use that Q&A function on the bottom of the screen to submit any questions that you have for our presenters today. Again, the chat function is disabled. With that being said, Brad and Nelson, we're super excited to have you today, and I'm going to pass the floor to you.
You're muted, Brad.
Okay. Good afternoon. I have to tell you, I'm really appreciative of the ability, our ability to be able to talk with you about, for a few minutes about some very important issues dealing with insurance, and particularly with respect to business interruption insurance, which has become very prominent because of COVID-19 and the impact that it's had on businesses throughout the state of Colorado. My name is Brad Levine, and I'm here with Nelson Waneka, my co-shareholder. We are with a firm that is got its offices located in Denver, although Nelson is going to be very quick to point out that he is actually broadcasting today from the Western Slope at his home in Glenwood Springs. Our firm actually specializes in the area of insurance. We represent policyholders in insurance disputes. We deal with all types of insurance, but I got to tell you, certainly in the last several weeks, our focus has been, pretty acute in the area of commercial insurance, business losses, and so on related to COVID-19. So we're happy today, like I say, to be able to provide you with some information, to be a resource, and certainly, as I know that everybody's encouraged, if you have questions either during the presentation or afterwards, we are more than glad to field those questions and do what we can to respond to them. So let's go to the first slide here. So the first question, of course, is when I talk about business interruption coverage, what are we talking about? Business interruption, whether you know it or not, it's actually in your policy. If you've got a commercial property policy, and of course that can include liability coverages, it can include different types of property losses. It's a standard type of coverage. If you have coverage which is going to insure you for losses, let's say, that are due to a fire or water loss or a burglary or anything like that, it probably also includes business interruption coverage. What it does, what this will do is it provides benefits for lost business income when you have a covered loss to commercial property. So if we go to the next slide, one of the biggest risks which business owners have is in the instance where they have, like I say, if you've got a fire that occurs or you have a piece of equipment that's stolen or damaged, destroyed, whatever it may be, you obviously want to get compensated for the property loss itself. But at the same time, because of that loss, it may have an effect. It might have a profound effect on your business itself. In other words, it may preclude you from being able to operate your business at the same level as it was before. It may mean that you can't do it at all. If you've got a fire that destroys a restaurant and, as a consequence, you can't open during the period of restoration for some 30 or 60 days, obviously that's going to have a profound impact on your ability to be able to continue to operate. In other words, you might have a closure that if you don't get some kind of compensation for it, you may not be able to reopen. You have obviously the losses because your employees aren't able to be able to work there. You obviously don't have income coming in. You may have ongoing obligations for leasehold, interest or mortgage or whatever it may be. So you have some definite losses because of what's happened to your property. So let's go to the next slide. Typically when we're talking about business interruption, again, we may be talking about the actual losses to the business itself. So if we have a fire or you have a water loss or you have, property loss of some type because of stolen or damaged property at the business itself, that's going to be potentially covered under your business interruption insurance. However, your business interruption coverage may be even more expansive than that. So for example, if you are operating a business in a town and there's been a fire that's occurred, let's say down the block, and as a consequence of that, the fire department, whoever the authorities come in and they say, hey, listen, you cannot operate your business until we get things cleaned up over there, because there may be smoke damage, there may be asbestos damage in the air, or whatever it is. So you've got an authority that's basically shutting you down for some period of time because of some incidents that occurred someplace else. There may be because of some type of hazard that people can't go in and out of your business. Okay, so there's a restriction on the ingress and egress from your property. It may very well be that you have a property, let's say you're in a shopping center, and let's say I'm going to use an example like a Ferris wheel, and that attracts people to come there to use it, and you are providing some kind of ancillary service to that Ferris wheel, and the Ferris wheel, for whatever reason, gets shut down. And as a consequence, you lose business because it's very dependent upon the traffic, the people who are coming there for the Ferris wheel. So there's loss to what's called an attraction property. So that may be another instance where, because of the loss that occurs off your premises, but it has an impact on your business income, you may have a claim, you may be able to recover under your property policy, under the business interruption coverage. Let's go to the next slide. So when we're talking about recovery, under the terms of the policy that you have in place, there are certain terms. In other words, the contract, that insurance policy spells out, that's a contract of insurance, and it spells out what your rights are and what the obligations that the insurance company has. So in order to determine what it is that you can recover from the insurance company, you look to the policy itself and the various definitions that are in the policy. So for example, most business interruption policies will provide coverage for lost income. And the definition of what's lost income and how you calculate the lost income is going to be set forth, sometimes in very acute detail. Sometimes it's very dense to try to sort of figure out what it is, but it's basically going to, again, cover you because of the fact that because of the loss, either on your premises or off your premises, but it's affecting your business income, for the actual dollars. And you have to prove that. You submit what's called a proof of loss to the insurance company and establish what the amount of the income that you lost as a consequence, as a direct consequence of whatever it was that caused loss to your property. Some policies go further. They don't only include compensation for your loss of net income, but also lost profits. In other words, to the extent to which you're able to establish that, let's say for the last 5 years during the month of June, where you've got a lot of people who are vacationing or whatever it is, and that may be a very profitable month for you, but your profits were down because of that loss that occurred at your property, that property loss, that your profits were down. So in addition to just the actual income loss, these policies will provide compensation for your lost profits. All these policies universally have a time limit on them. They talk about a period of restoration. And what that means is, of course, if you have, let's say there's a water loss, as a consequence that, the refrigeration in your restaurant goes out, and, you have to, have someone come in and do all the drying out in the dining area because it's been flooded. Whatever that time frame is the period of time that you're going to be able to make your claim for your business interruption loss. Very typically, these policies have a maximum number of days for that period of restoration. Typically, it's going to be 90 days. That's the most, under what's called a very standardized type of form. It's usually going to be 90 days, but sometimes it might be longer than that. Next slide. Now, again, the question of how do you know whether or not you have this business interruption law, coverage? Obviously you've suffered some type of loss, and the question that you're going to say is, what am I going to do because of these losses? Is that going to be covered by my insurance policy? Well, what you're going to do is, first of all, if you own or lease a commercial space for your business, if you own or lease equipment for your business, and you've got an insurance policy for your business, okay, it in all likelihood is going to include business interruption insurance. I will tell you that if you have a loss, if you're the sole owner of your business, but you have a homeowner's policy or even an umbrella policy, your insurance, your insurance agents told you umbrella policy, covers a whole myriad of types of things. Unfortunately, if it's a personal type of policy, like a homeowner's policy, there's an exclusion for business losses, okay? Anything associated with your business is not going to be covered. Now, I have to tell you, there may be, if you run your business out of your home and so on, and that's something that you've talked about with your agent, there may be coverage, but it would have to be something under a business type of policy in order for there to be business interruption insurance. Most typically, the presence of that type of coverage is going to be set forth in what's called the declarations page. That's usually the first page of the policy after you have the cover that tells you, describes what it is. The declarations page is the page that tells you what the various coverages you have and the limits of those coverage, the amounts of coverage, for example, for liability insurance, for property insurance, and so on. The declarations page is going to reflect that. At the end of the day, well, if you have any kind of loss, the first thing you need to do is report. That's the most important thing for you to do. It needs to be reported to the insurance company. And the way to do that is to pick up the phone, send an email, however it is that you contact your agent or the insurance carrier and let them know about the loss. So those are just some general precepts, if you will, about business interruption. And I'm going to now turn it over to Nelson, because what he will now address is the very specific issues that businesses all across the state have been facing because of COVID-19.
Thanks, Brad. Business interruption coverage, it's very obvious and makes a lot of sense when you have the common types of perils that most insureds face, like a fire or something. But it raises a lot more interesting questions with something like a virus or COVID-19 that haven't necessarily been answered yet in this precise context, but for which we have a lot of guidance on. The biggest issue that most insureds are facing right now is that because business interruption coverage is a property coverage, it's tied to a policy of property insurance that covers specific pieces of property, that it only applies when there's what's called direct physical loss of or damage to that property. You will find that language or some very similar iteration to it in every property insurance policy, but certainly every policy of commercial property insurance. So there's this interaction of, well, if business interruption coverage is only owed for physical damage, like a fire, like I said, that's very obvious. Well, is COVID-19 physical? Does it damage anything? So that's the first issue we're going to be talking about today. Another big issue in this arena is, well, what caused the business interruption? Is it the virus itself, or was it government mandated closure orders? I mean, there are tens of thousands of small businesses in Colorado and elsewhere that may or may not have had the actual presence of COVID in their buildings or at their properties, but were nevertheless shut down. So that interaction is something we need to look at closely. And then there are virus exclusions. About 10 years ago, or maybe a little more, in response to the SARS outbreak, a lot of commercial property carriers, in my mind, sort of surreptitiously inserted virus exclusions into business interruption coverage. And so that's an issue we have to look out for too. It's not present in every policy of commercial property insurance. It doesn't apply to every business interruption claim. That's something that you do have to look at closely though. Next slide, please. All right, so what's going on right now in the world of COVID claims and business interruption is there have been thousands and thousands of claims filed by business owners throughout the country. And maybe, Brad, maybe you can chime in on this, but I am unaware of a single claim being covered or paid, and I don't know anyone who has had their claims covered.
Actually, I've heard about it, but guess what? It was in France.
Okay.
not in the United States.
I haven't heard of any business in the United States receiving coverage. That's not unusual. What we're seeing is sort of a coordinated response by insurance carriers. Obviously, when this became a pandemic, insurance companies immediately put their heads together and tried to figure out how they're going to respond to this. What's happened is that insurers have, at least in my experience, uniformly taken the position that COVID-19 doesn't cause direct physical loss of or damage to covered property. Don't take that as gospel, because as I'll explain later, I don't think that that's true. I think it's a position that insurance companies sort of have to take to stem off a flood of claims. But I think there are very compelling and, in my mind, correct arguments that COVID-19 does cause property damage. And we'll be discussing those right away. As of right now, there are a number of test cases that have been filed in Colorado courts and throughout the country that are dealing with this issue. And Brad and I are on some of them, and we'll see what happens. Next slide, please. So getting into that direct physical loss of or damage to covered property requirement, as I mentioned earlier, because business interruption is tied to property insurance, you got to show some damage to the property, loss or damage to the property. Well, what does that even mean? What does direct physical loss or damage mean? Do you have to be able to see the damage? You have to be able to observe it with your senses. Is cleaning, if it can be cleaned, is something damaged? If COVID is present on a surface or suspected to be present on a surface, has that surface been physically damaged? So the insurance companies are saying no. Brad and I say yes, and we think the law supports that. Let's go to the next slide, please. So the first argument that COVID-19 constitutes physical damage comes from the plain language of those terms. In Colorado and elsewhere, insurance policies are interpreted according to their plain and ordinary meaning. The definition of physical is very, very broad, and it means of or relating to the material world and subject to the laws of nature. Okay, so COVID-19, you can't see it, right? But it's a material thing. It is subject to the laws of nature. It can be seen with a specialized microscope called electron microscopy, but it's there. It can infect you even if you can't see it. It can be spread to others. And so, at least in my mind, it meets the definition of a physical thing. And the plain meanings of loss and damage are also broad. I mean, when we see that word damage, a lot of people think, oh, it's got to be tangible. You got to, something has to break. And that's not necessarily true. Something can be damaged, or you can lose the use of it, even if it appears to be in perfect, fine working order. And the best cases that have explained that fact have actually come out of Colorado. So let's go to the next slide. So how have courts addressed this physical loss or damage requirement? Because that's really how this issue is going to play out. Because COVID is a brand new virus, and courts have never had a chance to answer whether it's physical damage. They're going to look to other instances where other courts have addressed what is and is not physical damage. And Colorado, actually, the Colorado Supreme Court in the late 1960s issued the very first opinion on this type of issue as to if something that is outside the bounds of normal damage, something that may not even leave a structure, visibly damaged at all, whether that can still constitute physical loss or damage. The Colorado Supreme Court answered that in a case by the name of Western Fire versus Presbyterian Church. And it's a very interesting case because I think it's analogous to COVID-19. In that case, there was a church building that over a course of time became filled with gas vapors. There was no actual gas, and there was no traditional damage to the structure. I mean, it still functioned the way that it always had. It looked the same, it absent the vapors, it would be a perfectly normal structure. But nevertheless, the fire department closed it down because gas was leaking from a neighboring property, and the fumes were dangerous. There was no actual gas in this church building. And the Supreme Court said, that's physical loss or damage. It's a loss of use that stems from something real, vapors, while you can't see them, they are there, and they are something real. They are physical. And when a building in particular is rendered uninhabitable or unusable and is shut down, then that, at least in Colorado, constitutes direct physical loss or damage. Since that time in 1968, there have been dozens of opinions in different circumstances that hold similarly. And if anyone is actually looking for, I mean, not to be too lawyerly for the crowd, but if anyone is looking for those types of cases or needs citations to them, I have them, I can provide them. But just by way of example, a couple of years ago, the New Hampshire Supreme Court held that cat urine odor in an apartment constituted direct physical loss or damage. That is not so very different from COVID-19. If anything, it's far less severe, far less dangerous. I mean, you can't see an odor, you can smell it. It doesn't appreciably alter the structure, but nevertheless, if it's to a sufficient degree that the building is rendered unusable, then it does constitute direct physical damage. And there are other types of cases that, asbestos being exposed, other sorts of gas spills, and the like. I mean, my favorite case involved an infestation of brown recluse spiders, where the court held that's direct physical loss or damage, even though the property itself was fine. And to take it one step further, there have actually been courts that have held that the threat of imminent physical loss or damage constitutes direct physical loss. And the cases where that has been held, there have involved like rock falls. Say you have a house or a commercial structure, it's not damaged, but it's gonna be. The rocks are gonna fall on it, and the courts have said that that's enough. So just keep that in mind. I have about 1 minute left here. I just want to go to the next slide. If you're a Colorado insured, which I imagine most people are, you also have a public policy argument. If your insurance company tells you COVID-19 is not physical property damage, cite them to the executive orders of Governor Jared Polis and the executive orders of the Colorado Department of Health and Environment, where they said, and you can see it here, that COVID-19 physically contributes to property damage. So next slide, please, and then we'll be finished up. Bottom line is this: call your insurance company and ask for your policy. If you wonder if you have business interruption coverage or potentially any coverage available to you, just call. There's no downside in doing it. You can call your agent as well. If you have a policy that contains business interruption coverage, or even if you don't know whether it does, just make a claim. Call your insurance company and say, look, I don't know if I have business interruption. I want to make a claim. Worst thing that happens is they send you a letter that says you don't have business interruption coverage, and at least then you'll know. If you have additional questions, do not hesitate to reach out to an insurance lawyer. Brad and I and the other panelists, we get these sorts of calls every day. We can answer your questions very, very quickly. If you do get a letter or a phone call denying your claim for business interruption coverage on the grounds that COVID-19 doesn't constitute direct physical loss or damage or anything else, I would contact an insurance lawyer who can answer that question more fully for you, because you can't always take those denials as a sure thing. There are good grounds for arguing that there's coverage, and an insurance lawyer can do that for you. And there are substantial remedies available to Colorado insureds whose claims have been wrongfully denied. So thank you so much for the opportunity. I hope it was helpful, and take care, everyone. We're going to turn it over now.
Thank you so much, Brad and Nelson. There is a lot to unpack there, and I am Erin McCuskey. I'm the director for the Northwest SBDC. I know that the business interruption insurance question is a very common question our business owners have right now. And so we are not done talking about insurance, and Brad and Nelson are going to stay on the line to answer a few questions if we have time at the end of the call. Otherwise, we will try to get to those questions via the Q&A chat as well.
before I turn it over to our next presenters, I want to give a quick shout out to a resource that's available, coloradocovidrelief.org, and we will put that in the chat. That is a service made available through the Colorado Lawyers Committee, which is 80 different law firms in Colorado who provide pro bono support on a variety of subjects, but they're putting together these resources for COVID response. So you can apply for assistance there. If you're not eligible for individual assistance, they have great webinars such as the one that they're helping us with today. So we'll continue to make these resources available for our small business owners. So with that, I'm going to turn it over to talk about commercial general liability insurance and how that differs. I'm going to hand it off to Sarah Wallace and Drew Petrie from Ballard Spa Law Firm to take it from here.
So, hi, I'm Sarah Wallace. I think that Drew Petrie may not have audio, so I'm gonna take the lead, and if he's able to get on, hopefully he'll let us know. So Brad and Nelson were talking about property insurance, which most businesses have if they have a physical space. I'm going to talk a little bit about commercial general liability insurance, which is also a very common insurance policy that businesses have. And so just like all the things that Brad and Nelson said about, you know, calling your broker and making sure you have the insurance, etc., all will apply to this as well. So I won't go over them. And since we have such little time, I'm just going to kind of jump into it. Like, if you could go to the next slide, please. So commercial general liability policies, unlike property insurance, is an insurance that companies have, which provides coverage against a third-party claim that is made against the company. So it's the insurance you turn to when you as a business owner have been sued. So the question here is, can these policies provide coverage when a third party sues you for something related to COVID? Next slide. So there are a few different possible types of claims that one would expect to come, and they've already started to come in. The types of claims that a business might find is that someone sues you because they claim that something you failed to do caused them to suffer from COVID. So a customer says, I went into your restaurant to get takeout and people weren't wearing masks, and I contracted COVID and I missed a lot of work, or worse, I got really sick, etc. Next slide. Some of these cases have already been filed. There's a number of cases against cruise lines. You all remember at the beginning of COVID, the people were stuck on the cruises. A lot of those people got the illness. There has been a number of class actions about that. There have been some cases where customers have sued distributors of hand sanitizer, saying you represented it would work and it didn't, I still caught it. There have been some cases suing nursing homes, saying, you know, you didn't protect my family member well enough, and you knew that there were things you could have done to prevent it and you didn't do it, and now my relative has either gotten sick or, God forbid, died. Next slide. So why these claims are worrisome, you may have been thinking on some of them at least. An example I gave about the restaurant, like, give me a break. This person could have gotten COVID from a number of sources. How could you possibly prove that it happened when they came into my restaurant? Well, true. These claims are going to be very hard for plaintiffs to prove, maybe less so in the cruise example or the nursing home where people are kind of stuck on those facilities. But that doesn't mean that people won't make those claims. And insurance coverage may be available to help defray the costs of litigation, even if the claim itself doesn't have a lot of merit. Next slide. So the benefits of a commercial general liability policy is that there is a duty to indemnify and a duty to defend. You can go to the next slide. And indemnity is generally where the insurer says, if you have a claim and the other person is successful and the claim comes within the ambit of the policy, we'll pay for their damages. So if, God forbid, in my cruise example, the damage is that the person died, the insurance would pay the other family potentially up to the limits of whatever the insurance is. The other type, next slide. The other type of insurance is, or the other benefit of a CGL policy is the duty to defend. And that duty is broader and one that can be helpful even when you have the meritless case. For instance, I got sick because I came into your restaurant, but not taking into account all the other places where a person might have contracted COVID. Next slide. And a duty to defend is very broadly interpreted. And so all you need in order to get coverage is that the allegations in the complaint would potentially fall within the policy. And so often there'll be a duty to defend where there is not ultimately coverage under the policy. And so let's turn to the next slide and we'll look at what the policies usually say. Actually, go to the next slide after that. So in the most broad sense, CGL policies cover bodily injury and property damage as long as the bodily injury and property damages were caused by an occurrence, which in layman's term is an accident. Next slide. And we'll focus in on bodily injury, which is the most likely type of coverage that you would have in this instance. And bodily injury generally includes a sickness or disease sustained by a person, including death resulting from any of these at any time. And, obviously on its face, it would seem as though a third party suffering from COVID would qualify as bodily injury. That being said, I think that all of us lawyers on the phone who practice insurance coverage will tell you that the insurance industry is an industry based on the word no. And as a result, the insurance company may dispute that it's bodily injury. And I would just echo what Nelson said, which is just because you get a no, that doesn't mean that it's the end of the game. After you get the no, you want to contact someone to help you fight the claim. Next slide. So the cause by an occurrence, let's assume we have bodily injury, the person is sick or they died. Then the question is whether it's an accident. So if the plaintiff alleges that he was exposed to the virus at your business, that should theoretically be enough to trigger coverage. I would expect that the carriers will argue that there was so much news coverage and warnings and instructions that if you didn't follow every single one of those to the T, that you should have expected that somebody was going to get sick at your establishment or by going to your establishment, and therefore there is no coverage. Again, that is something that will need to be litigated, but I guess there's two takeaways from that. One, you should follow as much as the guidance as you can to avoid someone arguing that you should have expected it. But at the same time, just because the insurance company comes back and says, well, there wasn't an occurrence because, you should have expected this to happen, that doesn't mean that the fight should be over. Next slide. So every insurance policy has exclusions. And so even if you fall within a bodily injury that was caused by an occurrence, the insurance company will likely come back and say, well, it's excluded under the policy, even though it would fall within the normal coverage of the policy. And the type of exclusions that I'm going to talk about really briefly are exclusions that are in most policies. But again, just because an insurance carrier says that the exclusion applies doesn't mean that a court of law is going to agree. There is an exclusion that exists in the marketplace for communicable diseases. The wording of these exclusions varies, and some focus on bacterial disease, other on viral infections. Depending on the wording, the exclusion could potentially bar coverage for coronavirus claims. What I have seen with clients is that sometimes there will be an exclusion for a communicable disease, but then there'll be a separate endorsement that gives a limited amount of coverage. So, you just want to read that exclusion very carefully and consult with an insurance lawyer as to how you may get past that exclusion. We also expect that, can you go back to the previous, we also expect that insurance carriers may try to say it's excluded under this kind of organic pathogen, fungi, mold, mildew, yeast, microbe exclusion, saying that it's a microbe. That is contrary to generally what the scientists say, just something to be aware of. The next one. Carriers may say it's pollution, and that COVID is a form of pollution, therefore it's a pollution exclusion applies. Don't expect that to be successful, but one that you would look out for. And then there is the expected or intended exclusion, which again goes to this issue that that a insured, expected or intended for this to happen. I think that is a bit of a reach. I don't think anybody wants this type of thing to happen. And obviously the legal definition of expected or intended is more precise than just once, but at the end of the day, I don't think that will be a successful argument, but one that will likely be made. So, in short, likely that most companies have commercial general liability coverage. If you are sued or threatened to be sued, you want to contact your broker and see if you should be making a claim. You should make a claim regardless of you should make a claim and make it quickly, and you should continue to pursue the claim even if it is rejected. As I said, and as Nelson said, these things are the first response will always be no, and that is not necessarily the final response or outcome for your case. And the fact that you think it's a completely meritless case is no reason not to make a claim under your insurance. So that kind of covers the basics.
Sorry to cut you off. I was going to say thank you so much. That I'm a little bit lost in how you all know how to keep all of these things straight in your head, because there is a lot of stuff legally going on with insurance that I did not even entirely understand. We have some great questions in the chat. Just to make sure that we can get through everything, I'm going to first turn it over for a quick presentation from Joe Reinhardt, who's from the Main Street Phoenix Project. He's going to talk about a resource that we want our small business owners, particularly restaurants, to know about. And there's a legal aspect to this as well, which we might discuss on a future call. We'll come back to questions at the end if we have time. Otherwise, we'll follow up on those questions through email if we can't get to them live today. So Joe, I'll hand it off to you.
Slides set up. Awesome. Yeah, so my name is Joe Reinhardt, and I work with the Main Street Phoenix Project and worker cooperatives, and I've worked in employee ownership and sort of specifically in succession planning for small business owners through employee ownership for about the last 10 years. And I think maybe next slide. So I think I know that everyone on this call who's a small business owner or who's a small business supporter is rooting for every small business to get through this crisis with their sort of ownership structure and their business model and everything intact, and to just sort of make it through this downturn as a small bump. But for some businesses that are a little bit more financially fragile, or were not, or where their business owners were looking for an opportunity to transition and do some succession planning beforehand, that might not be the case. That they might move forward that succession planning. They might, just be forced to close. And I wanted to talk a little bit about the Main Street Phoenix project, which is a new social impact restaurant group that we're actually working with business owners to help them elegantly transition out of their restaurants by purchasing those restaurants and then moving them into a family of employee-owned businesses, or an employee-owned restaurant group. So essentially, we are instead of liquidating, instead of selling to private equity, instead of just sort of shuttering the windows as we're seeing so many restaurants do, we're actually providing some new capital, some capital to the owner, and some capital to keep the business going, and then helping them move forward, helping those business owners move forward with their next chapter in life, or to stay on as a part owner of the business. And next slide. So as I said, we're actually putting together a restaurant group of businesses that would otherwise close, but are critical to their communities and are able to, in this way, they'll be able to be owned by their employees. Next slide. Yeah, so what that looks like is actually we're a fiscally sponsored project of the Rocky Mountain Employee Ownership Center. So we've got a little bit of grant dollars, and then we're working with impact equity investors and with local banks to provide debt equity to essentially purchase individual restaurants and bring them into it's not a not-for-profit, but it is employee owned. So the bulk of the profits go back to the employee owners, who would be the already existing employees of your restaurant or the restaurants in your community. And we're already working with a number of restaurant owners in Colorado to help them transition out, or help them sort of decide on the next steps for their businesses. And we think that, next slide. And we think for employees, because we're going to be part of a restaurant group, that we'll really be able to provide, I think, what many restaurant owners always want to provide to their business, to their employees, which is slightly better benefits, an opportunity to be really engaged with the business, slightly better trainings, career pathways, and profit sharing. And then we actually think, as part of a restaurant group, there'll be increased resilience and increased profits for the business, and that business will remain in the community. And next slide. And so, I think that in terms of us as a resource, we would invite any small business owners who are sort of considering how to transition out of their business elegantly, or who want to find a partner and transition out of their business in the near future in a way that actually takes care of their employees, to get a hold of us. And then I do want to say that there's many ways to use, essentially, to pass your business off to your employees if you're looking on the longer term. And that's actually the work of our fiscal sponsor and project partners, the Rocky Mountain Employee Ownership Center. And they're always happy to talk to anyone who is a restaurant or not a restaurant in any sector, and sort of people who are looking at sort of any strategy for transitioning. So they're a great resource as well. But I know this is sort of a very challenging time for many business owners, and we hope that everyone comes out of it in a way that's as elegant as possible. And so we hope to provide a socially responsible resource for businesses, owners, and communities to keep the restaurants that have really made their business, their communities vibrant, and to help keep them afloat and help them take care of their employees. And I think that's my allotted 5 minutes. So I'll stay around for a minute and, for questions, and then if there's any other questions, you can feel free to contact me at the email and phone number there. Thanks very much.
Thank you so much, Joe. If anyone in the audience does have questions, feel free to use the Q&A feature, and Joe can respond to those questions via that channel. We do have an increased number of inquiries right now about people wanting to set up co-ops or look at different types of employee ownership models. And so you can reach out to the SBDC, you can use the resources on your screen. We can all connect you to people who can dig in a little bit further, because there's definitely a lot more to it than a quick 5-minute presentation allows. So let's ask a couple quick questions. While we ask questions about insurance, I am going to ask our Startup Colorado team to put our poll question up on the screen so that we can kind of save everybody's time. We just, to remind you from the beginning of the call, we want to get your feedback so that we can make sure that we are offering information that is relevant to what you as our business owners on the Western Slope need to ensure your success right now. So please answer those as you continue to listen. This question came in during Brad and Nelson's presentation, so I think one of them will want to answer. It's a question from Telluride that says, we did not have any festivals this summer. Would this be accessory?
I think that, that is an example of where it is. If you're able to establish, and of course, you've got to go through the various hoops that, Nelson was talking about, as far as establishing there was property loss, that the COVID-19 qualifies for that, to the extent to which you obviously have the civil authority because of the shutdown by Governor Polis, his various orders. But I think that potentially is the type of thing when I was talking about attraction property. In other words, where you've got the festival, and if the festival is shut down because of COVID-19, and as a consequence of the lack of traffic because the festival's not there, that would be an instance where I think it would certainly behoove you to, to talk with an agent, talk to your insurance carrier, make the claim, and pursue that with the recognition, as Nelson said, that going down this road is not going to be one which is going to be a very easy one, because uniformly the insurance companies are just saying no, even if, and Sarah echoed it, even if they should be providing coverage, they're just saying no, and it may be a path that's going to be a lengthy one, but the outcome may be one which is going to be positive.
Yeah, or if you're the organizer of the festivals, and that's your business, or you're a local authority or a local organization that puts these on, as Telluride, they do great festivals. And yeah, look into it. I mean, likely that business has some sort of business interruption coverage. There's an argument that COVID-19 would be present in that big of an area, and make the claim. If it's denied, push forward, because you have arguments to make.
Thank you. We're going to do one and maybe two more questions, super rapid fire if we can get through them. So how is COVID going to impact insurance renewals? Are renewals specifically going to exclude COVID claims?
Great question. And from what I've been hearing, in the same way as Nelson alluded to back in 2006, because of SARS, the industry put in these exclusions for, for virus and bacteria. I think you can expect that on renewal, the insurance companies, the insurance industry is going to respond with specific exclusions. That's just the way they hang.
Someone will offer it, though. And
Yeah.
you can tell your agent, I want this coverage. Find it. And maybe there'll be someone out there that has it.
But it's not going to be retroactive, so.
That's true. Very true.
Okay, and one last question. What about effects of, and sorry, my screen's just jumping around a little bit here. What about effects of loss of revenue profits because of COVID on general and professional liability? If we're substantially down, for example, 50%, can I get a reimbursement or credit for loss of coverage?
That's a really good question. One of the, I know that, there's been offers that have been made by carriers, very frankly, I think as much as anything else for marketing purposes, that they're going to refund, costs for auto policies and homeowners policies and so on. With regard to professional liability and those kinds of policies, you can make the ask. I don't think you're going to get reimbursement per se, but I think it's certainly well worth talking about on renewal to have a reduced premium simply because of, loss exposure is going to be less because of, what's going on in COVID-19 and how it's affecting your business.
Thank you so much. I really appreciate all three of your time on this call. And as I said, we'll be using your feedback that we're asking in this poll right now to determine if we should keep going in this direction in terms of talking about more specifics for your business in the time of COVID. Please answer those questions and feel free to send us some feedback to our email channels if you would like to share more or learn more. I'm going to turn it over to Bonnie to close out our call.
Great. Thanks so much, Erin. And Joe, Brad, Nelson, and Sarah, thank you so much for being on today. It was incredibly insightful information for us today, so thank you. Just a couple following remarks before we close out here today. Just as a reminder, the PPP program is still available until August 8th of this year. And so we're really urging companies, if you haven't applied for it and need funding, to go to your local bank and check that out, as there is still adequate amount of funding available for small businesses if you have not done so. We are super excited that West Slope Startup Week started this week. This is our second year. If you were not involved last year, if you don't know what West Slope Startup Week is, you can go to westslope.startupweek.com. And if you are familiar with it, we really wanted to promote the mentor office hours because it's an incredibly unique opportunity for our small businesses. So through our mentor office hours, you can access the absolute best mentors the Western Slope has to offer. And that's every Thursday afternoon from 2 to 4 during West Slope Startup Week's mentor office hours. And so our good friends at Energize Colorado, we've been able to tap into the statewide mentor network with them. And we're really proud to offer that we have one-on-one 30-minute mentor sessions with over 40 subject matter experts. And so the idea is if you're a founder, an executive, and a leadership team, whatever you may be, if you're seeking marketing, financial funding, finances or funding, or any kind of business strategy assistance, this is the perfect place to go. So just real quickly, it is a little bit hard to find on the web page there, but if you go to scheduling page, you can see all of the participating mentors. And again, all of this information will be in the follow-up email, but that address is calendly.com/WSSW-mentors. Again, a mouthful, I'll email it out. But if you go there, you can go and select the mentors based on business strategy, marketing, and finance and funding. And you can click on the mentors profile links there and view their LinkedIn page and read their quick bio, and then you can book a time slot with them. So we really, really urge you to do that. And then if you haven't already built your schedule for West Slope Startup Week, remember it is free and all the sessions are incredible all the way through Capital, Marketing, Toolbox. Go check it out. We're super excited about it. And if we didn't answer your question today, I know we didn't get to everybody there, but if you still have questions, you can directly email those to us at startupco@colorado.edu, or you can just respond to the follow-up email and that will directly go to us and we can help answer those questions for you from our team of experts today. With that being said, you can also visit northwestsbdc.org/COVID-19 or the TellURightFoundation.org website for all of the resources that we've presented here today. And then if you want to access the recording or listen to other topics in your rural regions, you can visit Choose Colorado YouTube channel as well. With all of that being said, thanks for joining us today, folks. We'll see you in a couple weeks. Happy Wednesday.